right. Well, welcome back to the June edition of the Beyond Wealth Advisors Economic Update and Market Outlook. I'm John Cleaver, partner, senior financial advisor, and with us again is Dennis Bacon,
Chief Investment Officer at Beyond Wealth Advisors.
Absolutely. So we are excited to be back. Obviously, summer is in full swing. At least it feels that way. Lots of people moving around the country, and the economy seems to be in full swing as well. Since the first of the year, things have really kind of heated up a little bit. And, you know, we're even hitting some kind of highs of this current phase in terms of where things are at. And along with that, we've had, you know, the debt ceiling resolved. We've had some budget talks resolved. And so it seems like the air's been cleared a little bit in light of everything else that's going on in the country. So sounds pretty good. Is that what you're hearing, seeing?
Well, yeah, there's some other things out there too. The labor market remains strong, although there's been kind of a rotation to service sector as opposed to the higher paying jobs. There've been higher paying jobs, some layoffs in the higher paying areas, and a lot more pickup in the service sector. So what that means is the average hourly pay has dropped a little bit, and the average hours per week has dropped slightly. Well, it's a good sign that it's strong because it's at record, near record lows and unemployment. So that's good. Retail sales were up in the month of May over March, the prior 2 months, March and April. For those 2 months were down. So that was a good turnaround. China, with them kind of opening up on the world side, they actually went into positive territory in the manufacturing index for the first time in several months. At least I think they were up once 1 month earlier, but that was good. Housing data, new home sales have been up. New homes being started are up, but permits are down, and existing home sales are down. So it gets a little mixed in there. There are some areas that are still concerning that we've talked about before. Manufacturing index in the U.S. still remains woefully low, by most standards. Consumers' confidence, while still positive, is dropping. Interestingly, probably a lot of that has to do with news media and stuff like that. Inflation still is stubbornly right at 5%.
Yeah, I was going to say, so inflation stays high, yet the Feds are trying to tighten the economy. They're trying to slow things down a little bit. It seems like we have a really resilient consumer right now. And corporations seem to be navigating this fairly well.
Yeah, I think that's probably be a good way to put it. I think part of that corporate navigation, but we're seeing that pullback, and that's why the manufacturing index is down a little bit, because there's just not as many big orders being put in because of their lack of confidence, I guess, in going forward.
So it feels good. However, we know that there's more to come. They're still trying to slow the economy. They're still trying to tamper inflation. The Fed's notorious for reaching a little too far at times. So are you concerned about anything going forward? Because that's been our theme, right? Late summer, early fall, choppy waters. Is that still out there?
I think it still is. I'm not sure on the time frame at this juncture. It may be pushed out a little bit. The couple of good things out there, I think fixed income is in a really good position. The big risk area in fixed income is if you have overweighted in high yield bonds, and we do have a recessionary environment, it could be further negative for you. So not that you totally avoid them altogether, but you want to be very cautious in that area. I think on the long term, if we do have a recessionary environment, that intermediate and longer term, you'll be fine in those areas. Excuse me. And you'll be fine in those areas. If we don't have a recession, you're already getting a fairly good yield. So those areas I feel pretty comfortable with.
You're actually getting rewarded on the fixed income side of that.
You can get 4, 5, 6%, on investment grade corporate bonds right now, just depending on where you want to be and how long. On the equity side, though, it's kind of interesting. We're here seeing these great numbers. I mean, the S&P is over 4,200 today, almost 4,300. And that all really looks good. The problem is during the month of May, we don't have all the data for June yet. Here we are in early to mid-June, and the 9.5% return in technology.
Right.
The overall return was just under 1%.
Right.
And 8 of the 11 sectors were negative.
Right.
With the other 2 that were positive, only be modestly positive. And within the technology area, it's only a few players. I don't know what the number is, 5, 7, or 10, but it's very few players.
Very limited, very narrow.
That are, and this is I kind of go back and show how old I am. Back in '99, we had a situation where 50 stocks carried the whole market for all year. Right. Then we had 2000, 2001, and 2002, which were all 3 negative years. I'm not predicting that, but the idea that you have this narrow, what we call a narrow market, with just a few stocks driving the return, does not bode well for the economy nor the market.
Right.
So a lot of those are in news of AI and stuff like that.
Keep an eye on that.
Yeah, I'd say that's an area that I think there's more risk out there than if those things dropped. If just those 5 or 6 dropped 20%, we have a 13-14% drop in the S&P. Right. So I don't know the exact numbers, but it'd be something not good.
Right.
And so that's kind of a lot of concern on my part. Now the commodities area, it continues to perform badly. And that's really a bad indicator going forward, because if manufacturing and commodities are not performing well, that means nobody's willing to buy contracts out in the future because they're not looking at future growth.
Right.
So those things present a real problem.
Right. So maybe just summarize a little bit. We've touched on this already, that, big picture, yes, it's great. We've seen some positive signs in the market this year. We'll certainly take that. We know that it's narrow, so few stocks are really driving that. Let's keep an eye on it. Maybe not choppy waters, but definitely some headwinds ahead that we need to pay attention to. I'm guessing that things like diversification and a well-balanced portfolio and the tried and true, aligning with the client's objective, are all things that really play importance right now.
Right. Yeah, and I still am kind of in the camp where I feel like a little bit of dry powder is not a bad thing.
Explain that just real quick. What do you mean by that?
What I mean is you have some cash on the sidelines. You're saying, okay, we're making 3, 4, 5, 6%, whatever you're making on some stuff that is low to no risk, with the idea that if we have a recessionary environment, that's a good time to come in and buy. So I still think that's a good thing. I mean, it may mean you've missed out on some of the technology run up, but when you only have 10 plus or minus stocks doing the run up, it's hard to say that's unless you're in those. If you're in those, I guess it's great, right?
Right.
But if you're not, then it's a problem. So perfect. But I feel okay about the forward.
Right.
I think that we have some headwinds, and I know that nobody's going to like the if we. I hope I'm wrong. I hope we don't have any down.
Yeah.
And it may not be very significant. I don't know. But it just depends on what the news and the media and everything else kind of does. I mean, it depends on the news and the tenor of the environment. If we have something happen, or if it's something that's unexpected, that would be the problem area.
Well, I know a time or two ago we talked about how resilient the consumer's been, but they're also reaching their capacity.
Right. The debt limit on the lower mid-size and lower mid-income and lower income people is probably one of the highest it's ever been, which is my biggest concern going forward. And with all these other things going on, if we ever see that consumer spending number drop, we'll have a issue.
All right. Well, that was a lot of information, and obviously it's ever changing. And so make sure you reach out to your advisor. I know summers can get busy, but don't miss the opportunity to connect and have a great conversation. And with that, I guess the only other thing is go Cubs. I mean,
go Cubs. Yeah, they're not playing that great, but the lake looks good.
All right. Well, we appreciate you tuning in, and we'll see you next month.
Okay. Thank y'all.